Sure, thank you very much. Today, students, we are expected to do some practical part of what we have been, gathered in terms of the previous sessions. But before we proceed to that direction, I'll quickly do some recaps in terms of what was transpired in the previous session and what is expected in terms of the exercise and moving forward. So I'll quickly do up some recap because I can see the number of students are coming up in big numbers, which is good in terms of the attendance. Allow me to confirm from you, can you see my presentation on the site? Any indication?
Yes, we can see.
Yes.
Okay, thank you very much. Let me just quickly do some recap. But immediately that I'm finalizing that, I'll be able to share the exercise from the WhatsApp group so that I can be able to project on my site and do that as a collective, as a group. Basically, we have done a number of discussions in terms of the previous session. We touched based in terms of what we need to have in your business in order to trade, which we characterize that as a trading stock or the inventory. We able to also touch based in terms of the necessary contracts and how do you relate your business in terms of your suppliers and also in terms of your creditors. What the necessary contractual document that must be in place to assist the contracting parties in terms of your business and your suppliers. We also touch based in terms of the types of the inventory system. We discussed issues regarding the periodic inventory system, discussed also in terms of your perpetual inventory system. We also make some distinction between the two and make an indication that perpetually is calculating the cost of sale at the point of where you're selling this product to your customers. But in terms of your periodic, we also engage that to say these ones are being done in a periodical way, which means in a predetermined period of intervals. Could happen at the end of the financial year, could happen in a 6 months period. Normally, when that exercise is being conducted in a business sector, they normally say that is a day for the stock taking. In that process, we call it as a periodic inventory system. So these were issues that we touched based. We also touched base in terms of the journals. Does these processes happen in terms of selling, and buying? When do you record those aspects? An aspect that we'll focus on in terms of the exercise for today. We touch based in terms of the discounts, whether it's a discount granted or the discount allowed or discount settlement. We also address that particular transactions in terms of what is expected from you. We also indicated in terms of your sales journals, what records are you expected to create in the case that you are selling out your product or your stock, and in the case of your returns, if customers are unhappy in terms of your products, so they are also expected to return those particular goods. We talk about the journals. Ultimately, you are also expected to deal with the issues that we call the general ledger, just to tabulate up your transaction in the form of your T account. We'll be able to also talk about that. We also cover the issues of the segment discount. If we've got an account, but instead of paying in a 3 months period, you decided to pay in a 2 months period, there are certain segment discounts that are offered by the business sector. We also talk about the VAT. The VAT is a value-added tax. What is a VAT? Who is liable to pay the VAT? What is a output VAT and what is the input VAT? what is the percentage of the VAT that is being charged in South Africa. We explain or even the issues of the, when is the VAT refund is due in terms of paying over to SARS and when the SARS is expected to refund us. We also articulated in terms of the accounting implications where you raise your creditor and when you raise your debtor. We explained the issues of the VAT receivable. We also explained the issue of the VAT payables, at what stage this account might arouse. These are the aspects that has been covered in terms of the previous section. We also articulated the issue of the periods in relation for submission of the tax returns very well. We also talk about the issues that are affecting the inventory valuations. We talk about the first in and first out method as one of the inventory valuation method. The last in, first out, which is a LIFO. We also articulated at what stage that has been applied. We also talk about the issue of the weighted average, and that is outside the scope of your syllabus. We talk about also the issue of the depreciation, to say at some stage there are certain assets that we need to own as a business. We also need to take into account in terms of the accounting policies at what percentage the asset must be depreciated and so on. We touch based on the types of the depreciation. We articulated the straight line method as one of the depreciation. We put an example last time to say, how do you apply that into practice? How do you make an accountability in terms of the records? We also touch based in terms of your diminishing method, which is a reducing balancing method, and what was expected from you in terms of the accounting processes, which touch based on the bank reconciliation issue and the steps that are fundamental in that regard, and the reason, the fundamentals in terms of why we should do bank reconciliation in a business. What do you want to address? We articulated that one very well. But critically is just a recapping. Can I request that people look at their WhatsApp group, because I will remove this recapping slide and make sure that the exercise that we expected to deliver on is reflected. Just a moment, give me 1 minute to upload up. 1 minute. I just uploaded now. Can anyone from the group confirm? It's
yes.
written. Is yes. Okay. I will remove my presentation, the PowerPoint. Then I will reflect this one. All of us is expected to participate around this, so that we can be able to make sure that what we have learned in terms of the previous session, we can be able to apply it in a practical sense. Thank you very much for your patience. Can you see my presentation there? My presentation is reflected. Sure, thanks. In terms of what is expected, I want all of us to consider, I think this particular example is quite comprehensive, will be able to address the matters, the majority of the issues that we have covered. In terms of the requirement, because I want us to do what can be achieved within the time that we have for now, so that we can be able to make sure that what has been covered in terms of the previous lesson, we can be able to apply. So this is a requirement. I will give you the memo around this thing, but I want us to do it first as a collective. I will skip the requirement 1A, 1B. Let us do 1C, 1D, 1E, 1F. In terms of the above, we are expected to draw up the sales journal. In terms of your cash basis, we are also expected to deal with the aspect related to the purchases journal. We are also expected in both journal to deal with the returns. Is either you retaining the product to the supplier, or is a customer retaining the issues to your business. So let us address the requirement C up until F. All other stuff, you can do it. I will be able to assist you in moving forward. For purpose of simplification, I want you to assist me. I want you to assist me to take some pictures for this, so that we can be able to just to try to fill up the template, because I've noticed that from your assignment is kind of filling up, but there's a practical exercise that you must do it. From your notebook, draw this thing. Don't put figures. These figures won't make any sense from you up until we discuss. Draw these columns, your sales journals. These are the columns for your sales journals. When you're done, please just indicate to me. First one is your sales journal. Just draw only the columns and row, but don't fill anything. And I expected everyone to have a calculator, paper and a calculator. Have you completed to draw up your sketch of your sales journal? Indicate when you're done. That would be our first requirement. Then second requirement, draw up your purchases journal. These are the columns. Draw your columns in your paper, please. Don't fill anything. Columns only.
Done.
It's done. Then the third one is a sales return journal. Draw columns and row only. Don't fill up anything. Are you done?
Done.
Thank you very much. Then the last requirement is a purchases returns journal. Do this, draw this in your paper, and your calculator must be closer to you, and your pen, lead, pencil.
Sorry, sir, we cannot see the screen. It's just half.
It's just half. You can't see number F.
Yes, sir.
I wonder what is happening.
We
Just
can
wait a
see
moment.
it. We can see it. I
I
think
can
it's
see
on
it.
screen.
The screen is visible. Yeah,
The
it's there.
screen,
It is clear.
yeah.
But
No,
how
will
many channels are there? I've got
Yes.
3 channels. Is it 4 or?
Yeah, it's 4. F, this one will be number 4. F is written F, purchases journal.
Can I see the one before that? I think I missed one. I have
Can we see the
purchases.
one before that?
Yeah, don't worry, I will restart. I will start the process. What I'm saying, we have to perform 3 requirements. 4 requirements, I mean. The first requirement to prepare the sales journal is written sales journal, February to 2024. Can you see that one?
Yes. So we can't see anything. I can't see even the journal, the table. I can just see your name.
Aibu.
The problem
I
must
think
be
you
on
must
your end.
name.
Sorry?
I suggest those ones that are unable to see, can you quickly log out and log in? Don't worry, I'll be able to recap for you. Can you just quickly log out and log in?
Times 10 is C. Purchase journal is D. Sales times journal is E.
Yeah. Yeah, so number 6, sales journals only populate columns and the headings. Don't populate figures. Well, those figures doesn't make sense up until we discuss first. Then number D is the purchases journal. You've managed to capture this one.
Yeah.
Number E is a sales return journal. You've managed to capture this.
No, can you please pause there?
I wonder why E is not reflected. But what I will do, I will take a pic and put under the WhatsApp.
Can you please slide up?
Don't worry, I will mention the columns. I will mention the columns. Column E and F, I also posted into the WhatsApp group. Draw your own your columns and row, but don't include figures up until we engage.
Excuse me, sir. How can we find the link to the group?
the link for the group. I think the admin, the admin will assist. Can you assist the admin? The admin are you part of us? Let us resume the assigned task. Let us resume the assigned task. We are expected to deliver in terms of the requirements that I addressed below, to draw up your sales journal, your purchases journal, your sales return journal, your purchases return journal. This is a data that has been provided for us. We are expected to analyze each and every transaction and make the necessary application to say whether this particular transaction should be recorded in which journal. We are being guided here to say the following transaction of the Sunshine Class traders are VAT inclusive. We are being told, you are being guided, the following figures are taken into consideration the effect of VAT. So our requirement, the first aspect to consider, we must have to be careful to say, if these figures are VAT inclusive, how much the VAT component per each transaction. But in relation to the requirement, when I'm saying in relation to the requirement, in relation to the purchases journal or purchases return journal or cash return or cash or sales journal and returns journal, we must be able to relate in that context. So the approach, it will need the participation of all of us in terms of the analysis. So let us start that analysis. We are told the transaction that was happened on the 1st of February to 2024. The owner of the Sunshine, you will increase his capital at the value of 15,000. So we need to put an analysis. What does it mean that? It needs to be recorded in which transaction. So that would be an approach. We are also told that there's an occurrence of a transaction where the city council was paid in terms of water and electricity, but on the basis of so the approach is that now I need your participation on this. So in terms of the analysis of the first transaction, what could be your own contribution and thinking in relation to the requirement? We have to consider the first transaction on the basis of the sales journal, purchases journal, or purchases return journal, or sales return journal. What do we do about the first transaction? All of us is expected to perform in terms of the participation, in terms of the guidance. Mapanga, what we do in terms of the first transaction? What do we do?
So guys, we move. You can tell in. I move in. I move. Oh.
Can we be assisted with the participants?
I must move.
Could I suggest that the admin mute the people that aren't presenting, please? And can you also get help with getting onto the WhatsApp group? We aren't following. I'm sitting here, I'm lost. I'm trying to follow, but I'm not able to follow.
Yes, because there's
Who is the admin that's helping us?
Yes, the admin, can you assist on that? We'll be able to address that.
And also to see the screen to stay in with the transaction.
Yes, this data are
the
also
screen
posted.
is shared. I think that's an individual thing, but who is the admin? I'm not getting a response. I'm sorry.
Oh, no. Okay.
The screen is shared, sir. I think that's an individual issue.
Yes,
but if we can get assistance from admin, busy presenting, but we can't follow you because of the issues that we're experiencing.
Yes. But basically to break up the ice, but in terms of the requirement of the question, both transactions that has been occurred on the 1st of February 2024 would not be able to be accommodated. But if you look at the transaction number 1, basically it's a capital contribution. It means the owner of the business has contributed more. It will be accommodated by another journal. In this case, is not part of this, the requirement that we expected, but your cash receipt journal will be able to make a recognition for that. Equally, the transaction number 2, we paid. It means there's a movement from the bank on the basis of the consumption of water and electricity. So in terms of these 4 requirements that we want to test for tonight, they are not affected for that by the 1st. So let us look what has been occurred on the 3rd of February to 2024. Transaction number 1, number 2, and number 3. Number 1 is affecting our own
The screen is not
journals.
showing.
Robert, your hand is up. Lindy, do you want to chip in?
No, we can't see your screen.
Let me just log out and log in. Let me just log out and log in. It seems it's moving very well. Can you see now?
Yes, thank you.
Yeah, thank you very much. Let us start from the beginning. I explained what is expected from us. We are addressing 4 requirements. The requirement 1 is to prepare the sales journal. Requirement 2 is to prepare the purchases journal. Requirement 3
I was
is
able to see before, but it's not sharing now.
Oh God.
not sharing again.
Yeah. Yeah.
To some people, it's not showing. To me, it's showing now.
I would suggest those who can't see must exit, then come back again, because some of us are showing all the time. It doesn't disappear. So
Yeah,
I
it would
agree.
be easier
Yeah, it's still
to
there.
exit
yeah,
and then come
because
back again.
yeah, my assumption I think is on your side in this time around, because on my side is still reflecting very well, and immediately that I'm logging out and logging in, it stays permanently. I think for the purpose of progress, let us move. Let us move. Let us move. We are expected to analyze this transaction on an individual basis. We agree that the 1st of February, these are the occurrence. The 1st and the 2nd transaction are not applicable to the matter that we want to address. Now we're on the 3rd of February. These are the 3 transactions that has been occurred. 1, we purchased the merchandise. The merchandise is a trading stock. We are told that we are purchased this merchandise from this particular supplier and we paid by the check. This one is not applicable to the case at hand, But if you are required to record, you will record this one under the cash payment journal. But for now, we are just focusing on 4 journals, which is the sales journals, is the purchases journals, is the returns journals, both sales and purchases. Then the third one, we are told that we purchased, is you purchased the merchandise. The merchandise is a trading stock or is an inventory from this particular supplier, with a Ferguson Limited. What is the treatment of this 9.2? Where do we record the 9.2?
The purchases journal, I think.
The purchases journal. The purchases journal. And we are correct. Is your business purchasing inventory to the supplier? The supplier in this time around is a Ferguson. It's a Ferguson Limited. And this supplier is a creditor in other name. So let us analyze this 9.2 fully. What is the VAT component of the 9.2? If we are told that the 9.2 is VAT inclusive, what is the VAT component? Before us going to fill up that thing, let us have a discussion so that we go with the principle and the understanding. What is the VAT component? We are told on top, all these figures are VAT inclusive and the VAT component is at 15%. Now I'm asking you, what is the VAT component of the 9.2? I need attempts. Yes?
Can I try?
Please.
I think it's 1,425.
Is 1,000. Can you elaborate in terms of your logic?
The 15% VAT. Oh, sorry, sir. I said when I calculated, I said 9.5 instead of 9.2. Can I correct myself?
Yes, we can recorrect yourself, no problem.
Can I
We are
try?
here at 9.2.
Yeah.
What is the VAT component?
It's 1,380, sir.
Yeah.
Yeah, it's
Yeah.
1,380.
Does the people agree with that?
Yes.
Yes.
Yes, we agree.
Can I say the right
answer?
The VAT component is how much?
1,380.
380. Do we agree, all of us?
Yes.
Yes.
Press open. Go
Let us just quickly, for purposes of guidance, to quickly go there and fill up that journal. We agree that we must be able to articulate it very
How
well.
do we calculate it?
Your calculator must be closer to you. Your calculator must be closer to you. Can we be assisted? I've noticed that there's people who are not complying in terms of the rules. No, Bubele.
Gentleman also here, please, one of our people.
Yeah, I can be able to actually articulate for this. What are we saying? What is the VAT component of the 9.2?
1,380.
Another attempt? What other people are saying?
Sir, it's 1,200.
That is correct.
What is correct? What figure?
1,380.
80.
I was saying it's a VAT component, that one.
Yeah, the instructions above said it's VAT inclusive. So
yes,
in that 9.2, there is 15%. It's included already. But the question from you is, what is the VAT
component
that is inclusive? So 9.2 times 15%, it's 1,380.
That answer is wrong.
Yeah.
I think they were supposed to say 9,200 times
100 over 115,000, which will give them the 8,000. Then they take the 9,200 minus the 8,000, which gives them 1.2.
Yeah, for purposes of guidance, for purposes of guidance, I know if these figures can be here, but if you don't capture the logic right, you'll have a problem. There are two ways to calculate the VAT component from 9.2. Do you agree that?
Yes.
This 9.2 is equal to 115, this 1.2. Is 115 in what sense? A VAT component is 100 plus VAT. In this case, we are told is at 15%, meaning that at these purchases is 100, at this VAT component is 15. When you aggregate the two, you'll get 115. So we've got two options to do this. One option, what if you calculate the 9.2 times 100? You want to get the purchase price. What do you get? 9.2 times 100 divided by 115. What do you get? Put your
You
calculations
get
aside.
8,000.
Is 8,000.
8,000. Yes.
That is a method one. Immediately that you've calculated 100%, it means this one, you've got an answer for your purchase. Your purchase is at 100. So you've managed to come up with the 100. If you like, you look at 9.2 minus your 8,000, you'll get the output VAT. That is a option one, which is a suppression of figures. Then if you want to calculate VAT from here, if you like, you know this figure is at 115, but if you want a VAT component, 9.2 times 15 divided by 115, what you get?
You get 1,200.
Then this is your VAT component. It means if we are being told, you can be able to get the 1.2, but this one you have not provided. You can simply look at the difference. The difference will be 8,000. Do you get the logic?
Do you mind repeating that? I seem to be lost now.
Let us start the method one that I'm sponsoring. You are told that you've bought the merchandise from Ferguson, which is your supplier, at 9.2, and you are guided that this 9.2 is VAT inclusive. So now we are being instructed to draw up your purchases journal. Your purchases journal, you must have a VAT component, you must have the actual purchases, you must have your creditors. Now your creditors are given. I'm saying that if this amount is VAT inclusive, calculate up your VAT input or your purchases. How do you do that? This is at 115. Your creditors now, once it says VAT inclusive, it means it's at 115, is VAT inclusive. But this 115 is a composition of your purchases, which is at 100. Your VAT component, which is at 15. When you combine the two, must be able to give you the percentage for your creditors. Now I'm saying your first method, you can calculate your VAT by simply calculating your purchases first. Your purchases in this context is a 9.2 times 100 divided by 115. Then you expected to get your purchases at 8,000. Then you can play your figures in terms of subtraction now. Look at the total figure minus your purchases, then you get the VAT. That is the method one, that one. But if you like, you can also look at 9.2 times 15 divided by 115. This time around, your numerator is VAT. Then what you expected to get, you'll get the 1.2, which is your VAT component. Please master this logic. You able to master the logic?
Yes, sir.
Yes.
So I have a question, please.
Yes.
If 100, what does 100 stand for? Because I thought maybe 115 is the 100% plus
No.
15%. Or what does 100 stand for? What does 100 and 115 stand for?
Yeah. Let me explain from here, from this context. You see, once it says the VAT component is 15%, it means on top of the product that we are buying, there's an additional component of 15%. It means it's 100 plus 15%. The product that we are buying ordinarily was at 100%, but the government imposing tax, which is a VAT in this context, at 15%. Therefore, that 100 is 100 plus 15 in order to be VAT inclusive.
Sir,
Yes.
just in terms of those transactions, if it's all VAT inclusive, can you go to every amount and get the original sales plus the VAT before
Yes.
placing them?
Yes.
Is that relevant to every transaction in the transaction sheet?
Yes, you see now, this approach is not permanent. If the examiner likes, can say that these transactions are VAT exclusive.
Yeah. But since they say VAT was included in all those amounts on
Yes.
the transaction thing, and if you go with a pencil and you just fill it in quickly on the side.
No. You don't just quickly fill up. You have to do your own calculation in a separate paper.
Okay.
For example, now I will change the narrative.
Yeah.
You are not given now the 9.2. We are given the purchases at 8,000, and
Okay.
it's VAT exclusive.
Yeah.
I'm saying we are not given the 9.2 now. We are given the 8,000, and 8,000 is VAT exclusive, and we are told calculate VAT.
Okay.
Can we calculate VAT from here, from 8,000 now? What could be your approach?
Times.
Please.
The VAT is
No,
there, it's written
because I
1.2.
get
So we'll say 8,000 plus 1.2 is 9.2.
no, but I'm getting 920
no.
to add plus 15%.
I'm challenging your narrative now. I'm
Yeah, I
saying,
hear what you're saying.
I'm saying you are not given the 9.2 now.
Okay.
We are given 8,000, and we are instructed that is VAT exclusive.
Then you just
Exclusive.
add. You
just
do.
take
Can I type
8,000.
it for you?
8,000 divided by 100 times 115.
What do you get?
9.2.
Yes.
No. yes, you can do that if you like to be method number one. But another second method is to go straight 8,000 times 15%. You get the VAT amount.
Yeah. On your calculator, yeah.
Yeah.
Like I just typed it.
If you like, you multiply 8,000 times 15%, you get the VAT.
Yeah.
Then you add the
Then
two
you add
to
it.
get
Yeah.
the credit.
All right.
Thank
You
you,
see the
sir.
logic?
Yeah.
Let us change the story now again. You are not given purchases now. You are not given creditors now, but you are told the VAT is 1.2. Calculate purchases.
Oh shit. Hi, boss, sir. You're bullying us.
Now we are not given purchases. We are not given creditors, but we are told the VAT was 1.2. Calculate purchases for me and creditors.
Hi, sir. No, this is difficult now.
So I want to clarify the issue of 115. What does it mean in practice?
But give us a clue, please.
Maybe just give us a theoretical an answer that is just words, not calculation.
That 1.2 you multiply by 100 and divide by 15.
Divided by 15.
Exactly. So
You're so smart.
Exactly. This time around, we are given 15%, but we don't know 100, but we don't know 115. But in order to know 100, you take the 1.2 times the figure that you are looking for, which is 100, times 100 divided by 15, you get 8,000. Then if need creditors, we simply combine. So there is no single way to examine for this. It can be questioned in various forms, but what is important is an underpinning understanding of the process. Tobile.
Hi, sir. Sorry to take you back a little bit. For the first transaction on the 3rd of February, why is that one not included in the purchases journal?
That was my question as well. Thank you.
Okay, don't worry. We are going there.
Okay.
Because I want to make sure that you understand the basics. Once it says that paid by check, it means it's something that has been paid on the spot. Therefore, this one, if it would be recorded to the journal that we call a cash payment journal, it's like this one, the first one. If you look at the 1st of February, but you paid, there's a payment done by the City Council for water and electricity by check. Once it says by check, it means it's not on credit. But for now, the sales journals and purchases journal is an issue that is being rendered, but you paid in the next 30 days period, for example. It's something that has been purchased on credit. But if you look at this one, we purchase merchandise, it means we paid on the spot. So it can be recorded under your purchases journal. It cannot be recorded there.
Okay, sir. So the purchases journal only takes in credit payments.
Credit, yes.
Okay.
The sales journal is also taken into account credit.
But where would you put the check one then? Cash payment, cash purchases.
Yes, your cash purchases, there's a separate journal. To me, it is a straightforward. Once it says paid by cash or paid by check, it's your cash payment journal.
The money's gone, okay.
Yes, but don't worry, I will share the memorandum of all these transactions along those journals so that you can engage me in a. So we are covered by transaction number 2 in terms of the 3rd of February, this one of the 9.2. Let us engage now on 3rd one. Now is your business now. We are selling out to your customer on credit at 14.950. Where do we record that one? Sold is you selling out.
Sales journal.
Sales journal.
In terms of the VAT component, what is the VAT component? Is it the input or output for the VAT component? We are told these transactions are VAT inclusive.
Output.
What is a VAT component?
Output, obvious.
Output. Thank you very much. Thank you very much. I fully agree. The VAT that you are imposing to the customer is an output. I agree on that. What is the VAT? What is the VAT amount?
15%.
Calculate the VAT amount.
Yes.
Is the VAT 2,242?
How much?
2,242.
Let me do my own.
1950.
Yeah, I got 0.
I agree with the 1950.
What is the dominant answer?
150.
190. I'm in agreement. I'm in agreement. So what is the trading stock excluding VAT?
13,000.
13,000. Yeah, I think we have mastered that. That is a logic. That is a logic. We're expected to brought forward that type of analysis as an attorneys. This is your sales journal. We're expected to draw this. I think we have managed to capture for this.
Yeah.
Without memorizing, let us agree now. We are being provided the VAT output only. Calculate the amount with excluding VAT. Calculate the sales excluding VAT. We are only provided the VAT output. Come again? Calculate the sales made without VAT, excluding VAT. We are only provided the VAT amount now.
So, is it 1,950 divided by 15 times 100?
Then what is an amount?
13,000.
13,000. Yes, basically that is a logic. Let us agree now. There is no debtors amount. There is no output VAT. We are only provided sales. Calculate the debtors inclusive of VAT using this one now. 13,000. Then you must indicate your logic. We are provided sales excluding VAT. Now we want to know the total amount paid by the debtors inclusive of VAT. We are only provided this figure now. It's VAT exclusive now.
So,
yes,
13,000 divided by 100 times 15 equals 1,950.
Yes.
Yeah.
So I hope that you are able now to provide the analysis in that regard. So we are done to make a proper analysis in terms of what has been transpired on the 3rd of February 2024. Let us go to the 4th of February now.
Can you explain that again?
I'm saying in terms of the last transaction for the 3rd of February. The VAT component has been explained by the fellow students to say, in order for us to know the VAT output, which is included here, we've got 2 ways to calculate it. Is either you first one will consider the 950, times 100 divided by 115. 115 is the amount that is a percentage that including VAT. Then it will give you this figure, 13,000. Then 14,000 minus 13, it will give the percentage of VAT, which is 1950. So master those logics. Is either when amount is VAT inclusive and amount is VAT exclusive, you can be able to play around. Other people have managed to to attempt that. If you are given for this, what do you do? If you are given for this, what do you do? If you are given this, what do you do? So you should be able to move forward. You should also be able to move backward, applying these calculations in a proper manner. But you should be able to make an identity, whether it's a VAT output or it's a VAT input, and what are the sales and what are the data. Yeah, we should do some analysis. So we are done to analyze this transaction for the 3rd of February. Let us look for the 4th.
If we may, before we continue to the today for February 20.
Yes.
For February. You see the journal we just made now, the purchases journal.
Yes.
You gave us kind of like I don't know if I can use the word description, where you told us it is a journal for transactions that by credit that will be paid in 30 days.
Yes.
Is it possible for you to give us just brief descriptions as well for sales journal, purchases return journal, and sales return journal?
No problem. No problem. You know, in my previous session, I said, put yourself at the center as a business person, at the center. And your business, you purchase products for purposes of reselling. Then let us look this one. So once it says that the merchandise was purchased from Ferguson, is you purchasing these products to the supplier for purposes of reselling. So whatever that is being purchased by you as a business, you record under the purchases journal. It's you who's actually purchasing. But you purchase these things for purposes of reselling. Therefore, if you look at the 3rd transaction, is take the opposite of the above. It's you who are selling. It means Jensen is your customer. Once it said sold to, it's you now selling out to your customer. Then you consider this one into your sales journal. What is important? Look at the action word, purchased. Who is purchasing between you and the customer? Once is being you purchasing to the supplier, it means you record that to the purchases journal. But once you sold to your customer, it means you purchase to your sales journal. Do you understand the difference now?
Let's now say if that sold trading inventory on credit to Jason, if it was sold not on credit but cash, we received cash.
Yes, you see, once it says that it was sold on cash, you record on the cash receipt journal. It's an opposite for this.
Right.
This one, once you paid by check, it means you record under the cash payment journal.
So sorry to jump in.
Sure.
If the purchases journal, it's whatever is being purchased on credits, like whatever the business buys on credits or what?
Come again?
I'm asking, sir, that the purchases journal is whatever the business purchased on credits, or is it a person buying or what?
No.
I'm just confused with that.
It's a business buying. It's you and the owner of your business buying to the supplier. I normally make an example of SPAR. SPAR does not manufacture sugar. You have to buy somewhere in the manufacturing space, whether in KZN. You buy that from the manufacturer. They are delivered by truck. Immediately after the delivery, somebody will facilitate in terms of the packing. Then after they have been part of your stock in your business, you sell out to the public. Then you use sold. So many sugar has been sold. But by the time that you purchase from KZN, for example, you purchased as a business for purposes of reselling.
Okay, so thank you.
Don't mind, you should be able to practice and practice, then you will capture. So let us analyze the 4th of February. This one, what needs to be done? Is us, is business purchasing, you know, a desk from a city furniture. What do we do about this one?
Purchases.
Record on the purchase journal.
I agree. I agree. Purchases journal. Let us deal with the aspect of, we are told that is VAT inclusive. What is a VAT amount? And is it input or output? We are here now.
VAT input. VAT input.
It's a VAT input. I agree. It's a VAT input. How much the VAT input?
480.
I calculated 480, yes.
All of us can agree it's 480.
Yes.
Okay. Yeah, I think I'm able on that. We should be able to make the necessary distinction regarding with that. In terms of the purchases journal, in terms of the purchases journal, where is it? Fourth.
No, it's not there. Not there.
Fourth, just wait a moment.
You skipped it.
C, D, E, F. Let us just quickly do some reanalysis for this. Just wait for a moment. Yeah, this one, it's supposed to be part of the purchases journal, and the appropriate method is the method that has been applied. This is a figure inclusive of VAT. Then the VAT component, which is the input VAT in this context, is 480. I will check, but this one is part of our purchases journal. It's us purchasing. We are not selling, it's us purchasing. So this is the correct method that has been applied by you. VAT component is 480 on that. Then the 3.680 is a VAT inclusive amount. But I will double check for you in terms of the errors from the study guide. But it's a correct, you're 100% correct in that aspect. It's a business that has been purchased, and city furniture is a creditor or is a supplier in that context. It must also take into consideration the VAT component, which is a 480 in this context, and the VAT and the VAT inclusive amount is a 3.680. That one is a correct treatment, equally applied on what has been occurred on the 3rd of February, the second transaction. We purchased, even on this one, we purchased. There's no difference in terms of the treatment. Let us agree, even on this one, the VAT component is 480. If you calculate the amount excluding VAT, what do you do? Calculate an amount excluding VAT, even on this one, what do you do?
You take the 3,680 divided by 115. It gives 3,200.
So if you add 3.2 plus 480, what do you get?
3,680.
Yes, that's correct. That is an approach that will be expected. You should be able to calculate in moving forward and also backward.
Mm-hmm.
Let us analyze the occurrence of the 6th of February 2024, this one. Bear in mind, our requirements are only 4. It's a sales journal, purchases journals, purchases returns, sales returns for now, so that we can be able to quick up. But before we skip a transaction, we must articulate it. what do we do in terms of the transaction occurred on the 6th of February?
Yeah, we are purchasing.
It goes to cash transactions.
We are purchasing by what?
By check.
By check.
By check.
If we are purchasing by check, which journal is implicated?
Cash.
It's a cash. It's a cash payment journal. It's a cash payment journal. It means it's not really implicated for this, but we can be able to apply our own mind to say if we're required to prepare a cash payment journal, this will be taken care of this transaction. Then let us look at the second one. This one that involves the payment of wages. What do we do about this one?
So it's cash again.
Which journal? Journal name?
Cash payment
Cash
journal.
purchase. Cash transaction.
Yes, it's a cash payment journal as well. Look at the guiding words, a cash check to pay the wages. It means that somewhere you've got a number of employees that are receiving wages. This one is not implicating what we are doing, but it's important that you put the analysis in case that you are required. Let us analyze the...
Sorry, sir.
Yes.
The drew a cash check to pay the week's wages. It goes to cash payment.
Journal.
Is that not cash going out of the business?
Yes. Whatever that is going out of the business, you record from cash payment journal. Whatever that is received in cash by business goes to the cash receipt journal.
Thank you.
So those two are operating in an opposite. If money is paid on cash, you record under the cash receipt journal. But if you pay it out, you record under the cash payment journal.
Oh.
So the question at the end, we were not implicated at the present moment. Look at the occurrence of the 8th of February, these ones. We've got two transactions, payment and received settlement discount.
Cash payment.
What is on account? On account is debt?
It's credit, yeah.
On account.
Where we are now. Yes. It's just the language that is being used. If supplier, has supplied me a particular stock, I have to pay on their own account. Just the language, but the key word is here. Paid. It means it's you paying this company.
Cash payment journal.
Yes, cash payment journal. Then let us look at the number one, the number two. Who is receiving now? Received settlement discount.
Cash receipt journal.
The entity, me receiving.
Is received by whom?
By my business.
By me, the business owner.
By the business.
Hey, I agree, but I'm happy with the articulation. Do you think the VAT component is implicated in that context or not?
No,
it's not.
Why could not be implicated?
But that's the discount. That's the... No, I don't know.
Because it's received.
We remember. We just don't remember.
Remember, whatever that we expected to pay was VAT inclusive. But whatever the reason might be, you were offered a discount. The VAT is not implicated.
With no discounts.
Well, if there's
I'm
a
taking
discount,
a fat chance, but I think that the VAT would have been already taken into consideration with the discount. The discount is on the amount that you paid, and the payment was already VAT inclusive.
Let us do an example here. Let us do an example. We are expected to buy an item which is 100 rand. Is 100 rand is VAT inclusive. And if it's VAT inclusive, in essence, this product was 85 rand. So I decided to give you 15% discount. You buy it at 85%. And there's no guideline. It says that whether I grant a discount or to you, therefore the VAT implication are becoming exempted. So let us provoke debate about this. If you are being offered discount, it means that VAT implications should not be taken into account. If yes, why? If no, why? Probably let us approach along those dynamics.
Give it a try. Probably, if it's VAT inclusive, this VAT has been applied already. It was 100 rands. So the decision for you to give the discount, maybe you gave that 15% off, but the VAT was implicated already. It cannot be implicated twice on the same amount.
On the same amount. Probably let us be specific now. The 230 amount that has been received on the basis of settlement, is it including VAT, yes or no? If yes, why your argument? If no, why your argument?
I want to say yes. Sorry for not putting my hand up. I want to say yes because like my classmate just explained, you are getting a discount on the amount that is being charged, and the amount that is being charged already includes VAT.
Yes.
Yes, that's what my colleague said. So I think the discount already takes into account the VAT amount.
So this 230, are we saying there's no VAT?
There is.
How much?
Yours, sir.
15%.
VAT inclusive is 15%.
We're saying the VAT doesn't.
Can you even know, because you don't know on what was the amount that you got discount on?
Exactly.
You can know because you are told that it's VAT inclusive, so you are sure that there is 15%.
But do you know if that 230 15%?
What is important?
Because discount can be off 50% as well.
But 15% always remain the same.
Because you know the guiding principle here. We are told whatever that is being listed here is VAT inclusive. Is not disputable, that one.
Okay.
Whatever that is listed here is VAT inclusive. It means even this 230, there's a VAT component of 15%.
Correct. Correct.
So do you take 230 and you work out how much was 15% of that amount?
Yeah.
Okay.
If not, yes, why?
By 115, because yes, there is VAT inclusive included.
But it's 2 rand. Am I right if I say 2 rand?
Don't worry, keep your answer, but it's correct to advise us what other people are saying.
So I think it's 30 rand. The VAT in the discount is 30 rand.
55.
Oh goodness, guys, you're
I
making
got 30 rand.
I took the 230 times the 115 over the times 100 times 15 over 115. Yes.
So that is 30 rand.
Yes.
I agree. I agree on that approach. But
So can I ask something?
Yes.
Does this amount go to the debtors allowance journal?
No, wait.
Come again?
Does this 230 go to the debtors allowance journal?
No, I think the correct approach to respond on that, who is receiving this discount between you and the custom?
Oh, it's me.
Me.
Yeah, it's you.
I'm
I
receiving.
purchased.
Yeah, it's you. Because the question now that I want to impose, if we agree out of 230, there's a VAT component. Is it input VAT or output VAT?
Input.
You see?
It's output.
But what is
It
important?
means it output since I'm the one who did that.
Yes. Because what is important, you must know, is a VAT segment discount, you know, enjoyed by the customer or by the business. In this context, we are saying it's a business at 230. So what is the general consensus? Are we saying this 230, there's a VAT component of 30 rand, all of us? Or is there anyone that is contrary?
I'm just kidding.
Is VAT inclusive? So yes.
At 30 rand. Are we in agreement with that?
Yes, we are.
15%.
Sure.
I don't want to commit on the 30 rand, but it's 15%.
Sure.
I'm falling in shame over here.
And it is true that it's an input VAT because it is the entity that is buying. It's not the customer. I might be the customer, but it's the entity.
Yeah, you can say we are spot on as much that has been highlighted in terms of the difference, because it will be addressed in terms of the receiving, because the discount received will be reflected also in your cash receipt journal. But what I want to test from you was this calculation part, to know exactly that was inclusive of VAT. So to say the discount therefore exempted from VAT was wrong, but we are told everything is inclusive of VAT. I think on what has been I sent to you in terms of this, I'll also send at your right time. Look at the cash receipt journal and cash payment journal, and look at this and see. Then you'll come. If I can impose any question from the WhatsApp group, we'll see how to tackle it, so that we can be able to link even this pay cash payment and cash receipt journal aspect. But what I was willing to engage you was the aspect of the analysis of it, because this is a discount received, but at some point we'll have a discount granted. Can you imagine? We'll have a discount granted. Then we should be able to put a proper analysis in that context. It's an essence that it's an agreement that 230 is VAT inclusive, and we are told. Let us agree now that out of the amount that has been received as a discount of 230, we are only now aware that the amount received, the VAT component, is 30 rand. How do you calculate your amount excluding VAT from here? We are told now VAT component is 30 rand. We are not told in terms of the amount excluding VAT and the amount including VAT. What do you do?
I must find 200, yeah?
Yes, 200 is correct. It's an amount excluding VAT. Therefore, if you add, you'll come up with these amounts. That will be the logic. Let us quickly look at number 10, the occurrence of the transactional number on the 10th of February and the occurrence of the transaction on the 12th. Let us look those ones concurrently. What do we do about number 10?
It's a sales journal.
This one, it means it's you selling to the public. You simply record that on your cash receipt journal. This amount, then you will see the columns there. It's not a big deal. But once it says cash receipt journal, it means you record on the spot under your cash receipt journal. Let us look at number 12. Let us look at number 12.
It's a sales. Credit note.
Can we be here, all of us? We are running out of time. What do we do about number 12?
Issued a credit note. That is me, the business, issuing a credit note.
So sales purchase, sales return, sales.
Cash return journal.
In terms of the requirement, where to record?
Oi.
Cash payment.
You know. Let me take you back. You see this gentleman, Jason. If you look on the 3rd, we sold inventory on credit to this gentleman. But on the 12th, we issue a credit note on the similar gentleman on the basis of overcharge on the 3rd of February to 2024. You see, this one has a direct correlation, this and this. So what do we do about the 115? Where do we record?
Returns journal. Cash returns journal.
Cash return journal.
Sales returns.
Sales returns journal. Okay.
I agree.
But why? Please.
You see, by the time that we sold this inventory for this particular guy on credit, we debited. Once we debited, we created this one as a debtor. But somehow, we are acknowledging that there was an overcharge. For you to reduce the debit of this gentleman, you have to issue a credit to deal with the credit side, to reduce. Then the credit is meant to reduce. But you reduce in what basis? It means that somebody has come forward to say you overcharge me. You overcharge me, it means your previous balance is overstated. You must have now a reduced amount to the value of 150. So that is how it works. So the issue of reducing, you use the two methodology. If you add, you debit. If you reduce, you credit. That is how it works in terms of the accounting processes. Remember, out of this transaction occurred on the 3rd of February, there was also the VAT component implicated. Even if this gentleman has been now has been issued a credit note in relation to the transaction occurred on the 3rd of February, VAT component is also implicated. So are we saying we are recording to which journal this one? And what is a VAT component? Is it input or output?
It's output.
It's an output. How much?
In rand.
Come again?
15.
How much?
15 rand.
15 rand. I think it's straightforward, but do you know how to calculate the 15 rand? Let us just quickly confirm. Let us just quickly confirm and see. You can see this is a gentleman. You can see. Let us say the output VAT, we are only given the output VAT in terms of your returns. Your credit notes is at 15. Calculate the actual sales returns excluding VAT. We are told that there are returns, but what is only disclosed is a VAT output part. Calculate the sales returns excluding VAT. How much?
100.
So can you please kindly mute the one singing there?
It's irritating. Who's this?
I disabled that fellow. Is disrupting us.
Sorry, say, is it 100 Rand? I'm so
No.
lost.
No, I'm saying, in terms of your returns, we are still here. We are told now the output VAT is 15%. We are not told the sales returns. We are not told by debtors. I'm saying calculate your sales returns, excluding VAT, based on this one, on the 15. Sales returns.
15 divided by 15 times 100, which equals 100.
Is 15 by?
Divided by 15 times 100.
It's 100.
I'm in agreement. Yeah, in fact, you almost captured what is expected, but it's up to you if you given a particular issue. But the issue that I want to address, if you are told that the figures are exclusive of that, you must know what is expected. So the 115 is addressed. Let us look the second component, this one. What do we do about?
Sorry, sir. You'll forgive my slow mind. Why are we debit? Why are we putting it on sales? Which sales are being returned now? Because we're taking money back, not sales per se.
Look, this issue, we have to take it in from the illogical point of view. You see on the 3rd of February, you see the third transaction, this one. Yeah. This one. We are told that on the 3rd, we sold inventory for this guy to this guy at 14,950. This is what we have done it. But when you come in on the 12th, by the time we are selling this trading stock with this particular gentleman, figures were inflated. Figures were inflated by 115. Figures were inflated, right?
It is not sales.
Figures
money
were
is involved.
Yes, figures were inflated. But the accounting now is that those sales were in quantities multiplied by rents to come up with a value. Then you debit it. It means now when you do refund, we have to reduce what has been expected to be paid by this gentleman, which is 14.9. We have to reduce by 115. But in essence now, from the logical point of view, it's not a straight line method. We have to create the issue of debit and credit. In order to reduce the account for this particular gentleman, you must have a credit transaction. This credit transaction of 150 have to reduce the 14,950. We have no other alternative, but the issue here is not really in a literal way to say that you sell two products, therefore one of the products is returned. But the issue is that there's an overcharge in terms of the cost. But to reduce the 14.950, you cannot go direct and minus. We have to apply the double entry accounting system. In this context, in order to make a refund for this particular gentleman, we have to have this credit. And in order to have this credit, it must be this gentleman is coming on the basis that I'm going back to that particular business to reclaim my amount of 150. So there will be no impact in terms of quantities, but there will be impact in terms of values. In order to have impact in values, you have to apply this double entry system. Hence, they are saying here, the issue of credit was issued on the basis of the overcharged, not necessarily in quantities, but on the basis of values. Do you understand the logic? Because it's not like if we look here, it says that the trading stock of what was 15, then this gentleman has returned 1. No. We are not told in terms of quantities, we are told in terms of values. Then in order to address the issue relating to values of this particular transaction, we have to apply the credit arm to reduce this one. So that would be logic. In fact, as we are progressing, in fact, not for now, but I will give for you, you check it. They will do what they call it is a tier account. The tier account will have a debit side and the tier account will have a credit side to give effect for this. So it's not like mathematical formula to say, yes, it was overcharged, therefore take out the 115. There must be an accounting logic. And the accounting logic, it was 115 overcharged. What was the initial amount? What was the initial amount? The initial amount was 14.950. But for us to make some reinvestment in terms of the 115, we have also to take into account for this in terms of the credit note. So there is no literal return of items. No. But there is an issue affecting values, but in the context of debit and credit, we have to address this matter on the basis of your sales returns. So the issue of debit and credit, it goes that a particular route so that we can be able to balance up your books. Otherwise, if, for example, we can say, why this gentleman cannot just take money from the till and simple refund? You see, and simple do paperwork and refund. It means this figure will remain overstated if there are no reconciliation backward to make sure that out of the 14.950, there's an overstatement of 115 that need to be taken out. But to make sales returns general, you are trying to reverse some of the errors that have occurred in terms of the previous transaction. Whether in the quantities or in the values. Sure.
Okay, just for clarity. Now we're issuing this sales return on the credit note because it was bought on credit. In the event that it was bought on cash, we're going to put it on the cash payments general. Isn't that so?
Exactly. Exactly.
Okay.
For
so
example,
the mathematical side would have been applied there because now we're going to take money from the register.
For example, if this gentleman we sold this on the basis of cash, it means will be recorded under your cash receipt journal. But when it comes back, in order to make rectification for this, we have now to put under your cash payment journal as if it's you now who are paying. So we'll be able now to take this one into a cash payment journal because now we are paying back. It means that if bank is got debit and credit side, this 14.950 will go to a debit side. But once you identify for this, this must go to your credit side. It means your cash payment journal must reflect for this to reduce the amount that was received on the basis of cash payment journal. But unfortunately for this one, it goes to for on credit. And the assumption is that on this, probably it will already received this amount because it was on the 12th or was not yet received, but it was already accrued in terms of the accounting systems. But you are correct, if it was cash basis, you record it under the cash receipt journal. But when you identify that there's an error in terms of the overcharge, you reflect that under the cash payment journal. Because now you'll be reflected as if we are paying back to the customer. So that is a correct approach in relation to that. The second transaction in terms of the 12th of February, what do we do about that one? 950.
It goes to the cash payment journal.
Cash payment.
All of us are in agreement.
Yes.
Let us go to the 15. I'm also in support of that.
Cash sales amounted to.
Cash receipt journal.
Cash receipt journal.
The second one.
Cash payment journal.
Cash receipt.
No,
No.
cash receipt.
Cash receipt, because
journal.
it's receipt.
Yeah.
Because it's a payment.
Because it says receipt.
From
I'm in agreement. Both of them, the first two, are cash receipt journal. Let us look at the third one.
Settlement discount. That is, we're paying the person. We're going to put it on the cash payment journal.
Settlement discount granted to him on this
payment.
Who's him?
I
It
like
might
that.
be
Who's
you,
him?
it might be me.
I think we're still speaking about J. Jason. That's him.
And look,
Him is Jason.
look, and this discount you must cross-reference to discount offered on the 8th. You say this one received settlement discount by whom? Then come here on the settlement discount granted to whom?
To the customer.
I think we must say to
So Jason.
The names.
I think
if you say to the
Jason.
You know, regardless of the name, but I just want to position yourself. Is it discount granted to a customer or is granted to you by your suppliers?
Customer.
To the customer. Let's say to the customer.
Exactly. No. Yeah, yes and
I think
no.
the person receiving the discount is JJ, because if you check what's written just above, is that he paid the monies, received a check from JC payment of his account.
Sure.
So the discount is that payment that he made. Isn't that so?
Yeah, it's correct. Yeah, I'm in agreement. This is a discount offered to a customer, which is at 345. Now let us look at the implicated channels. Which channels are implicated here?
Cash payment.
Is it purchase
payment
return?
journal?
Cash payment.
Let us have let us have a discussion. Others are saying cash payment journal. Others, Martin.
I think the operating word there is granted. If we have granted, if we have granted, that means we're going to be giving out the discount. So therefore, the money is flowing from the MT. Sorry.
We are paying.
Yes. Yeah.
We are paying to the customer, so it's a payment journal.
Yeah, I'm in agreement with the majority, which seeks to say, you know, we're expected to receive 100 rand, but whatever the reason might be, we granted a discount of 15 rand. In essence, that 15 rand, we actually lost, but we must reflect under the cash payment channel. I agree on that. I'm in agreement. I support that. Let us argue on the issue of VAT. Or also, is it really implicated these channels that we are dealing with, which are 4? And in fact, there are 2 on this one, because if it's a customer, it's a sales channels and sales return channel. I agree on this. Payment channel is implicated. What about other matters? Are we saying nothing?
Sorry, please repeat, sir. Which matters?
I'm saying the discount granted does not implicate VAT.
That's correct.
I can appreciate even yes or no answer, but
Why
let us
does it?
support.
Why does it not implicate VAT? Because the instruction there was that all of the transactions
Yes.
are VAT inclusive.
Yes.
So
Yes.
why does it not implicate VAT?
Yes,
The
exactly.
VAT has been applied already on this amount. Remember, this is not another amount. This is the same amount that VAT has been included already.
We had the same debate on the 230 rands. Remember?
Let us hold that argument there. You remember, my brother, on item 8, a similar argument you sustained to say, yes, is a settlement discount received. That component was already taken care of that. But the guiding principle is here. All that has been listed here are VAT inclusive.
VAT inclusive. Yeah, okay, yeah.
Is not disputable.
Yeah, true.
Yeah, I can see people are lawyers will be able to argue, but what do we do about this one?
VAT is included.
How much is included? Is it a VAT input and VAT output?
It's an output.
Giving.
It's going to a customer.
No.
It's we are paying. The entity is paying.
Because you're giving discount.
No, but it's an output because it's from the entity to the customer, right?
Yeah.
VAT input is when I'm buying bulk from SPAR. VAT output is when I'm giving my customers, oh God.
You're sitting to
It's okay.
I think VAT is included already because this amount that they're giving, it's a discount. So VAT was included from the start. And this is not a discount amount. This is the amount that they gave him because they wrote on this payment. So this payment that was given, VAT was already inside. I don't know if I'm making sense. So I vote that VAT is included.
So is included is how much?
35 grand.
I calculate that the amount times 15% divided by 1
45 rands.
35 grand.
It's 45 rand.
Yes.
Yes.
Let us just double check. Are we recording to which transaction? Journal, I mean.
Sales returns journal.
Sales return journal.
Yes. Oh, like the first one. Like the first one, we did the same.
Same thing. We just, oh my God.
The same as the first one for discount.
Look, on this one, the guiding principle. I think the gentleman which was articulating the fact that these matters are VAT inclusive. It says that now our focus is under these 4 journals. But the major implicated ones is also the aspect relating to the aspect that is relating to cash payment journal and cash receipt journal. But at the right time, I think I will quickly forward for you for this, because this 45 is articulated in your cash payment journal. It's very articulated, that very explicit, but you look at that and see what needs to be done in terms of the other appropriate journals. But I'm in agreement in terms of your own approach. But the only criteria that you must always keep in your mind is your umbrella statement, whether this is got VAT or not. And if it's there, calculate it. But you are not required sometimes to prepare all the specific journals. Even now, we have done sales journals and returns, but Other examiner will say that prepare the cash payment journal. And what do you do? But the approach is one, you know, is one in that regard. It's an honest proof for this one. It's an honest proof for this one. Immediately that someone has paid in check, but we receive a check, it means it's a cash receipt journal. Out of that receipt, we can put a practical example. This gentleman, he has paid out 6,000. And we are so happy to the extent that we are saying, out of the 6,000, we are giving you the 345 as a discount. But in essence, it's a loss for this to us. But you are not going to write it as a loss. We have to reflect under your cash payment journal as this amount. But this amount is inclusive of VAT. And the VAT component is for 5,000. We are correct in that approach. But what is key, the main, you know, direct correlation, it means someone has paid. You don't just get a discount. You get a discount simply because you have managed to service your account properly. The underlying assumption, Mr. Jason is able to manage to pay the 6,000 rand in his account. We can assume maybe was a settlement. He has settled this 6,000 rand on the spot. As a result, the business has offered to him a 345 discount. But that was the main money that needed to be received. But what to keep relation to customers, we offered for this. But that is how it should be treated in terms of your cash payment journal. Let us quickly move again to number 18. What is your view in terms of number 18?
We record on sales journal.
Number 18 is a sales journal. What is other view? I'm agree. It's a sales journal. Number 2.
Purchases journal.
Purchases.
Cash payments.
Purchases.
Cash payments.
Yeah. The second one, the second one is a cash payment journal, because if you look at the end, paid for by the check, it means it doesn't implicate the but if you are told to draw up the cash payment journal, it means you're expected to take into account for this. You know the VAT, you know the VAT component and so on and so on. This is a similar method. Doesn't mean if it's a cash payment journal or what, the VAT component is different. It's the same issue. Item 3, this one.
Purchase journal.
Should be journal here.
Come again?
Journal.
Yes, it's you.
This one on purchase.
Yes, it's you with the business purchasing these items in terms of Glasgow. Let us look at number 20. And number 20, you must link to number 18, the last transaction.
Return damaged goods.
What is our view?
We record to purchase return.
Purchase return.
Yes, I agree. I agree on that. It's us who purchased these items from this particular company, but unfortunately, when you do the inspection, we aren't happy with certain items to the value of 575. What are the VAT implications?
As usual, implicated.
It's an output.
It's an output. Why is it an output?
The entity is from the entity 2, because I'm in the center.
Yes, from the entity. Why is it output? Is it in or output? Yeah, the VAT component that is affected here.
Output. It was my money. I bought yesterday.
Because we're giving out the goods.
Look, let us analyze. Let us go back. Let us go back. Who is purchasing here from here?
The entity.
What VAT was implicated? In
Output.
or out?
Output.
Is it output or
Input.
input?
When we purchased,
Input
it was
because we are
input when
buying
we
from the
purchased.
supplier.
Yes, I agree. When it's us purchasing from supplier, they are charging us input.
Yeah,
Yes.
input. Sorry. No,
Sure.
you see my
Now it's us, it's not the customer, it's us retaining issues that we purchased from this particular gentleman, but we are returning back because we are unhappy, whether with the condition, whatever, at 575. So I'm saying, what is the VAT component that is implicated? Input and output.
Input.
Sure.
Yeah.
Sure. Let us quickly look at 21.
It's a cash payments journal.
Cash payment, sorry.
Cash payment journal.
Cash payment journal.
Yes, I agree. Item 2.
Sales return.
Yeah.
Sales return journal.
Vice versa to number. Vice
Sales
versa to
return.
number
Sales
20.
return journal.
It is a return journal.
Sales return.
It's a return journal. Let us put the right name. What this journal are we talking about?
Sales return
Sales
journal.
return journal.
Yeah. You see number 20 and number 21 with the item that we're talking about. Number 20 is us returning, but on number 21 is a customer.
Customers returning.
Can you see the difference?
Yes.
So here is a customer. Here it was us. Let us look number 25.
Yes.
Number 25.
This is,
Just the receipt. It should be cash receipt.
I agree on that. It's a cash receipt. The second line item.
Cash receipt.
Cash receipt.
Segment discount. We debated about this one.
Just now.
We debated about this one. Let us just leave it. We know the VAT is 30 rand. Excluding VAT was 200 and so on.
Yeah.
Number 26.
Cash payment.
Cash payment. The one relating to telephone.
It's a cash payment journal.
Cash payment.
The last one.
Sales receipt.
It's a
Cash receipts journal.
cash receipts journal.
Cash receipt journal. Number 27.
Purchase.
Cash payments journal. Purchases journal.
It's a
Purchases journal.
Purchases journal.
I agree. Purchases journal. The guiding word is here, credit.
Credit, yes.
Credit, yes.
The second one.
Cash payment journal.
Cash payments journal.
Cash payment journal. The guiding document word is here, paid. The last one is received the segment discount.
Cash receipt journal.
Who is receiving discount here? Segment discount.
We.
The company.
Yeah, you know, I'm happy that we as a business, sure. Look, I expected to run this race up until 2 hours. My 2 hours has been elapsed now at 18:45. What I will do, I will quickly send all the memo around this matter so that you can do it. When you're stuck, you can be able to reflect for us. You can do from A to G. For now, we attended C to F, these 4, but you'll add A, B, and G. include all these aspects. You can see during our own discussion, we touched based on the aspect of cash receipt. The cash receipt journal is here, cash payment journal is here. But these are the matters that are understandable. You'll be able to understand easy. But when you're stuck, you can be able to to make some reflection and see. But the serious mileage we have covered, but it's only these two and G. And G is simple to indicate the issue of debit and credit. But for now, thank you very much for your participation. I was expected to deliver for this, but as part of the information that I will circulate, I will include also the bank reconciliation along with the memo. Just familiarize up yourself so that next time I can be able to quickly do up the bank recon and move forward with the assigned task. Any aspect that we want to quickly recap just before 1850, I'm running to another meeting. I just want to join. But critically, the only way that you must make sure that you understand is this requirement. The amount is inclusive of VAT or not. If it's inclusive of VAT, what is expected from you? If is excluding VAT, what is expected from you? And basically, the basic method, analyze this thing with the understanding of journals so that you can be able to relate accordingly. Otherwise, thank you very much for the participation.
Sorry, sir, before you go, is there going to be a recording in case we get stuck? We can just watch back.
No problem, but in terms of that custodianship of recording, the Mr. Kwayana will assist all of us because I'm just a participant in terms of the session, but is administered by Mr. Kwayana. Mr. Kwayana will assist. Probably, I'll try to speak to him to make sure that is the veto. The recordings are available because I can see they are still on. We almost took over 2 hours in terms of the recordings. The recordings are accessible, but I will interface with Mr. Koyan.
All right, thank you.
Sure.
If I may ask, sir,
Sure.
the skeletons that we drew, sales journal, purchase journal, and all the other journals that we did today.
Sure.
When we're running over this, you would at times ask, I don't know if it was for a matter of making sure we understand or you were confusing us, because there's a skeleton already. Maybe let's say it's for sales journal. The skeleton is VAT output. For a sales return, it's a VAT output. Can I not just be thinking when I go to sales journal, is it going to be VAT output or is it going to be VAT input? Can I just use this skeleton to say, if it's a sales journal, I know it's VAT output. If it's a purchase journal, it's VAT input. If it's a sales return, it's VAT output. If the purchase return, it's VAT input.
For shortcut purposes, we are correct, but underlying principle is that you must regard yourself as a business owner. At what stage that input VAT must be imposed to you? When you buy, it means when the purchases must deal with issues relating to input VAT. But when you sell these products to customers, it means your sales channels. You have a responsibility in terms of South African Revenue Services to charge output VAT. But for shortcut, you can do that. But ultimately, we are expected also to explain the underlying circumstances. At what stage you charge output VAT, you should be able to explain it. But in terms of this skeleton, it's just to simplify issues. To simplify issues so that you can better understand. But in essence, you charge output VAT to customers, but input VAT is being imposed to you when you buy from your suppliers. We are correct. You are correct. You can do that.
Thank you.
You can do that. You can do that. Yeah, let me just quickly forward this to you. I'll do it now, but I hope you try to, as much the solution over there, but try to push the understanding part, so that when you come
Can
across
you
with a
please
similar
scroll
issue.
up a bit to the letters A to F? I want to take a screenshot, please.
Come again. The hand is up. 252 is only reflecting the student number. I'm not sure the name.
Oh, sorry. We're almost done now.
Yes, we're done.
Yeah, I wanted something. I wanted you to clear up something for me, but since I don't, I think I'll take it to the next class since we're going to attend another
Oh,
one.
Visa, I said I needed, from letters A to F.
He's going to share the question paper with us. Is it a question paper or another random with us? We don't have to worry about screen
Your line, ma'am, is not really good. Yeah. If you can quickly type on our chat box, so that I can be able to quickly look at. But what I'm saying, for now, we have done 4 journals. I think is from C to D. Is from C to G. But the memo that I will provide will include A to G. Kaba, can you assist us? I can see we are also engaging other forum now. Yeah, thank you very much. Even for those that who participated in terms of the chat box, I've noticed now there are a lot of the participation in that regard. Thank you very much for that. Yeah, thank you very much. Let me just quickly upload up the full questions.
On what platform, sir, if I may ask?
Yeah, sure.
I'm asking on what platform are you going to post them?
There's this WhatsApp group that we proposed on the first session. I'll simply post them.
Oh, unfortunately, I was unable to join in then.
Just wait a moment. I will complete this and find the alternative.
Okay, thank you.
Yeah, I just forwarded this. I think it's got 117, but you'll see it's logical. What we just completed here, there are subsequent answers below, also covering the requirement of A, B, and the last one, your cash payment journal. People, can you indicate?
Thank
Can
you,
you
sir.
receive it?
Received.
Yes. Just look at that in detail at your own time. You will see it will also cover the aspect of the pen record, but what is critical, look at this, what we have done for now, but address all the requirements. Address all the requirements from requirement A, which is your cash receipt journal, requirement B, cash payment journal, requirement C is the one that we did, the requirement D is a purchases journal we have done, and the returns, the last one will be your general ledger. Do that. When we've got challenges, we can be able to interface with us. Thank you very much.
Thank you, sir. Have a good night. Bye.
Sure, thanks.
Thank you, sir.
Bye, Chairman.
deserve a good MDS bonus. All right. nobody here anymore.